This is Real Estate This Week with Stephen Gasque, continuing 16 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm so glad you're here for breaking news all about the drop in mortgage interest rates. A drop to just over 6%, the lowest rate in 3 years. Today, what it means to you if you're a home buyer, home seller, or homeowner. Also, what the Federal Reserve did to help make this happen. Joining us now is Danielle Hale, the Chief Economist at Realtor.com. Danielle, thank you for joining us for this breaking news edition of Real Estate This Week.
Thanks, Stephen. It's good to be here.
I am so glad you're here. And so, Danielle, let's start with why this big mortgage interest rate drop happened. What caused it?
Well, over the last few weeks, we've seen mortgage rates come down because everyone was expecting the Fed to cut rates at its meeting, and it did. So, fortunately, for consumers, mortgage rates have moved lower. I think a bigger question is what's going to happen moving forward. And we have seen a little bit of stability in mortgage rates after the Fed cut. So we may not see a whole lot of additional downward movement, but we've already seen mortgage rates come down. They're below 6.5%. I expect them to fall a little bit lower, but to remain in that low 6% range. So that means real savings for home shoppers and even for homeowners who maybe bought when rates were closer to 7%. If you haven't already considered refinancing, now might be a good time to talk to a lender about refinancing and what you could potentially save there. So it's definitely a good thing for the housing market and for homeowners.
Interesting. So, Danielle, let's take a quick look at where mortgage rates have been and why they've been so challenging for buyers. Now, for the last 3 years, rates have been in the mid to high 6s and 7s, and there was one big jump over 8% just about 2 years ago. But now they're just about 6.25%. So, Danielle, what will that mean to people who are hoping to buy a home?
So for people who are hoping to buy a home, today's mortgage rates are very close to the best levels that they've been in the last 3 years. So you're looking at better buying power than many have seen over the last 3 years, and that means, if your budget is for a mortgage payment that is a couple of $1,000s a month, you can stretch that money a lot further, and you can afford a higher priced home than you would otherwise. So, and I think, that's an important component of thinking about, am I ready to buy a home, is thinking about your housing budget and how far that budget goes. So, just to give some more specific context, at today's median listing price, if you're going to put a 20% down payment, you're going to end up borrowing, a little over $400,000. Or a little under $400,000, your monthly payment is going to be just over $2,000. If you had looked at a similar priced home and a similar down payment when mortgage rates were close to 8%, they got up to almost 7.8%. That would mean an extra $300 every month and an extra $4,000 a year just in trying to make those principal and interest payments on your mortgage. So, these lower rates mean your budget can stretch a lot further, or you can reduce that monthly payment and still afford the same priced home, both of which are good news.
Interesting, Danielle. And so the way I like to put it is, with lower mortgage interest rates, you could have the same house with a lower payment or the same payment with a more expensive house.
Exactly. Yeah. So you've got the option to choose either way, and either way, it's a win.
And someone qualifying for a mortgage. Now, if someone was considered a marginal borrower, like they were just barely able to qualify at the old rates, it's going to be a lot easier now.
Right. Yes. And so for someone in that position, I might recommend if you barely qualified before, take advantage of the lower rates and keep your home price target the same and enjoy those monthly savings to help you give yourself a little more cushion and build up your savings rather than maybe trying to push the envelope and keep that budget amount the same.
And Danielle, one of the things I know that you always track is buyer demand. Is that going to surge with this drop in mortgage interest rates?
That's a good question. Buyer demand has been pretty soft in 2025 because mortgage rates have been high for quite some time now, and home prices haven't really budged much. So it's a tough market to navigate as a buyer. One thing that we're seeing is because of that softer buyer demand and a bit of an increase in supply, the housing market is more balanced now than it has been pretty much in the last 9 years. So when I say market balance, I'm using month supply as an indicator. Month supply compares how many homes are on the market for sale and how many homes are actually selling. So it's a good indicator of that balance between supply and demand. And today's month supply figure is between 4 and 6 months, and that indicates a market that's in balance nationwide. Realtor.com did a study recently where we looked at this for the top 50 markets, and we found some pretty striking variation. There are 7 markets that are already in buyer's market territory, which means they have more than 6 months supply. And so buyers are in a better position in those markets to maybe ask for extra contingencies in their contract, or maybe even submit an offer that's somewhat below asking price, and sellers may still accept that. But 7 markets are in that buyer's territory, and among the remaining 40 or so markets, they're split roughly 50-50. Half are still in seller's market territory. So sellers have the cards and buyers need to be prepared to compete potentially. And the other half are roughly in balance, sort of mirroring the trends that we're seeing nationwide. So in general, there's more balance nationwide, but it really depends on where you are.
Interesting. And Danielle, let me try to connect the dots here, because we know that lower mortgage interest rates also matter to sellers because they tend to buy another house immediately when they sell. Now, about that, many sellers have been reluctant to trade their 3% mortgage interest rate for maybe a 7.5 or close to 8, but now that they're in the low 6s, do you think more sellers will put their homes on the market, and as a result, the shift to a buyer's market will spread faster?
I do think we'll see more people put their homes on the market for sale. But as you noted, a lot of those people who are selling are also buying. And so when that happens, we see an increase in both supply, but also demand. And that would tend to keep markets wherever they are. It's really this shift in demand or shift in a supply that isn't accompanied by, an increase in demand or supply on the other side. So first-time buyers, for instance, that's an increase in demand without any increase in supply. Or if we think about investor sellers or vacation home buyer sellers, or someone selling any other type of second property, that's an increase in supply that's not necessarily accompanied by a demand increase. Builders, new home construction, that's something that falls in that category too. So those are the changes that tend to influence that market balance metric. As you mentioned, when we see just an increase in supply in general, a lot of those suppliers are existing homeowners who are going to buy another home. And so that is accompanied by an increase in demand. So the good news is when mortgage rates drop, I think we see an increase in both sellers and buyers, and that tends to increase turnover and activity, generally speaking, in the real estate market. And I think that extra dynamism is a good thing for everyone. There's more churn in the market. There's just more to choose from, which is, I think, beneficial to everyone.
Absolutely. And I'm also wondering about new home construction because, as we all know, lower mortgage interest rates also affect builders, and it might let them put up more new homes.
Yes, that's right. So when the Fed cut its rates, that tends to affect the rates that builders pay on construction and development loans more directly even than it does mortgage rates. And so it's going to lower the cost of construction for builders, which is a good thing because they're dealing with some pretty significant headwinds now from changes in the labor market and changes in the cost of their materials. So this benefit is something that I'm sure they will welcome very much right now. We've seen construction activity really had been at the higher end of its range over the past couple of years. Builders have been doing a lot to try to close the significant housing supply gap that we had nationwide. But in the last, really since 2025, we've seen softer construction activity. Builders have really navigated an uncertain policy environment, and it's been harder for them to kind of keep construction levels the way they were. So this should be a nice benefit to their bottom line, and we should see a little bit of a pickup in construction activity as a result.
And that can be a great option, especially because many builders will provide incentives on the price of the house, on upgrades, and in some cases, mortgage interest rates. It's a really good option.
Yeah, that's right. In fact, we just conducted research looking at the types of deals that builders are offering to try to sweeten the deal for purchasers. Builders are, they tend to be very rational in how they approach the market, and they obviously have a lot of homes to sell, unlike an individual homeowner. So they're approaching the market very strategically, and the scale at which they're operating means they can sometimes negotiate different deals. And to your point, we took a look at the different types of deals that they're offering, and based on advertised promotions, 2/3 of all of the promotions offered are reduced rates. So it's a way for you to potentially even get ahead of the drop in mortgage rates is by looking at new construction. This summer I was out and about and saw a builder advertising below 5% rate, which was fascinating to me.
Wow.
Yeah, not bad.
And another thing a buyer might find if they go looking for new home construction is less competition. Because again, the big lines tend to be at existing homes for open houses and things like that. There's not as much competition for new home construction.
Yes, that's right. And they are better supplied. So that is another potential advantage. I would say something that's worth pointing out, we don't necessarily see a lot of building everywhere. So builders are very active in the South and in parts of the West, but we don't see as much building in the Northeast and in the Midwest. That doesn't mean there's no building in these regions, but that it's just not quite as common. And so if you're looking for a home in the Northeast or the Midwest, it might be harder to find a new construction home. But if you're in the South or the West and you haven't added new construction to your consideration list, you should definitely do that.
That's a great observation, Danielle. And before we leave mortgage interest rates, let me also ask you about the vast number of homeowners out there who might be looking to refinance. Does this represent a good opportunity for them as well?
Yes. I mean, so I would say yes and no. So I'm going to give you an economist answer here. So it is the case that most homeowners with a mortgage that have an outstanding rate that's still well below 6%. So if you're in that majority of homeowners, refinancing is probably not going to make sense for you unless your financial situation has changed and you need to tap cash or equity in your home for some reason. But in general, it's not going to make sense for you. But if you're someone who bought a home within the last 3 years, we've seen mortgage rates fluctuate between roughly 6% and roughly 8%. And if you bought in the higher end of that range over the last 3 years, when mortgage rates were in the higher end of that range, it very much may make sense for you to refinance. There have only been a couple of periods when rates have been as low as they are now in the last 3 years. And if you didn't happen to hit that sweet spot before, it's worth talking to your lender about whether now is a good time to refinance.
I see. And Danielle, I've talked to so many agents who have counseled their buyer clients who have asked, should I wait? Should I wait to buy a house until mortgage interest rates dropped? And many of the agents have counseled those clients to say, why don't you go ahead and get the house now? And if rates drop, you can refinance. And I think now we're at that point.
Yes, absolutely. That was a really common piece of advice, I think, over the last 3 years. And so if you are in a position where you bought a house and were looking to refinance, it is a good time to check with your lender and see if that makes sense now.
And speaking of that, is this still a good time to shop around? Because we've always said that if you just go to one lender, you just get one offer. But what about going to 2 or 3 different lenders?
Oh, absolutely. In fact, it's a little old now, but we did a study roughly a year ago looking at ways that you can reduce your mortgage rate no matter what the norm is in the market. So we often talk about mortgage rates as if they are one single thing, but in actuality, there are lots of different rates for lots of different types of products, and those rates are going to be adjusted somewhat depending on your characteristics as a buyer and depending on the lender that you talk to. So there are things you can do to improve the mortgage rate that you'll be quoted, things like improving your credit score to raise your credit worthiness as a buyer, putting a larger down payment so that you're reducing your loan to value ratio, also boosting your income or reducing your debt so that you have a better debt to income ratio. But the number one thing that you can do to get a lower rate relative to other buyers or other situations that you could find yourself in is shop around among lenders. So the great thing is that doesn't require any pre-work. You can do it right now, and it could potentially net you the biggest savings in a mortgage rate.
Wonderful. And if it's part of your personality, you can also play the lenders against each other and tell one, hey, I got a better deal over here. Can you match it? And sometimes they will, sometimes they won't.
Yes, that is something that you can do. And that's actually probably also a good way to know if you've got a really good deal if the other lender won't match it.
Well, Danielle, earlier in our conversation, you mentioned the path forward. So right now, we're looking at mortgage interest rates in the low 6s. Will they hit the high 5s soon, or is now about the lowest point?
That's a great question, Stephen. And my expectation, based on what I know today, is that mortgage rates are likely to stay in the low 6% range. We could see them dip into the high 5s, but I expect that would require a bigger economic slowdown than I'm currently anticipating. So I think absent slower economic activity and a potential recession, we're likely to see mortgage rates stay in the 6% range, but the low 6% range. So better than they have been over the past couple of years, but not yet heading back to a sort of pre-pandemic range that we saw over the last years before that.
I see, Danielle. And you know, it would be kind of nice if they did drop into the high 5s, because that would be great for buyers. Plus, we'd be able to say, high five.
I suppose we would.
Well, Danielle, I really want to thank you for joining us on this breaking news edition of Real Estate This Week, talking about the drop in mortgage interest rates and what it all means to today's home buyers, home sellers, and home owners. Thank you, Danielle.
Thanks for having me, Stephen.
You're very welcome. Danielle Hale, the Chief Economist at Realtor.com. Next time on Real Estate This Week, it's back to our regular schedule as we examine the fall market. We'll have expert advice as the market shifts from sellers towards buyers. What's it all mean to you? That's next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.